I'm so glad to welcome you here to the Clark Howard Show, where our mission is to serve you and empower you so you make better financial decisions in your life. One way we try to empower you is through our Team Clark Consumer Action Center. We answer your questions one-on-one for free. We're in our 31st year of doing it. We're not Baskin Robbins, but it's our 31st year of doing so. And we are here to serve you Monday through Friday, 6 hours each weekday, based on Eastern Time Zone, 10 in the morning till 4 in the afternoon. We serve you one-on-one with advice, guidance, and information at 636-49-CLARK. Today, I'm going to talk about SUVs. SUVs are the dominant segment of the vehicle market, and it is what's called an SUV often is actually what they call in the industry a CUV. It's a car platform, but with a body shape that looks like a sport utility vehicle. So a lot of people drive them just because they think they're cool. And then a lot of people with kids, parents, drive them as a child hauler. And I want to tell you something without terrifying you. A new report is out that a lot of SUVs that are very popular in the marketplace are actually unsafe for the occupants of the middle row, the children who might be in one. And I want you to have the information. Don't want to unsettle you, upset you, but you need to know. And coming up later, danger to your wallet, being overcharged at the register. Gosh, it's happening a lot now. I need to tell you what to know, what to look out for. So there are different organizations that test vehicles for different things. And the Insurance Institute for Highway Safety, which is an industry body that tests vehicles in different scenarios to see how safe they are. Because the insurance industry is not nearly as concerned about what damage to a vehicle occurs in an accident. What they're really concerned about is the people who get hurt or worse in a car accident or vehicle accident. And they're not doing that out of altruism. The real cost of insurance is not repairing a vehicle or paying off a totaled vehicle. It's the cost when someone's injured. And all you have to do is ride down any freeway and see all the lawyer billboards to understand what I'm talking about. So the Insurance Institute for Highway Safety crashes vehicles in all different scenarios to see what is a very safe vehicle in an accident and what's not. So for people seated behind the front, the kids, certain vehicles tested very, very well. The Ford Mach-E Mustang got the highest score of anybody in the test the Insurance Institute for Highway Safety did on SUVs recently. Also at the top of the heap, the Tesla Model Y, the Ford Explorer, and the Subaru Ascent. Now let's talk about what did not do so well. Marginal for passenger safety in that second row. Chevy Traverse, Toyota Highlander, and Volkswagen Atlas. Poor ratings. Poor, meaning that there's significant danger of physical harm in an accident to people in that middle row, according to the Insurance Institute for Highway Safety. We've got the Chevy Traverse. No, I'm sorry, the Honda Pilot, because Traverse was marginal. Poor. Honda Pilot, Hyundai Palisade, Jeep Grand Cherokee, Jeep Wrangler 4x4-door, the Mazda CX-9, and the Nissan Murano. So, I don't tell you these things to cause you anxiety. I just want you to know that if you are buying a particular SUV because you want your children to be safe, according to the testing of the Insurance Institute for Highway Safety, the vehicles I named are either marginal or poor in passenger safety in that back seat. Again, I'm going to tell you the marginal ones: Chevy Traverse, Toyota Highlander, Volkswagen Atlas. Poor ratings: Honda Pilot, Hyundai Palisade. Particularly of interest to me, those two, which are very large SUVs and did not have a safety level I would have expected for kids in that back seat. Jeep Grand Cherokee, Jeep Wrangler, four-door, Mazda CX-9, Nissan Murano. And those are the ones tested in this round. So what kind of things made these poor or marginal for kids in that back seat? And they did a theoretical 12-year-old dummy. And what they're looking for is risk levels of chest injuries, abdominal injuries, head injury, or neck injury. And the Insurance Institute for Highway Safety, IIHS.org, you can see their data on safety of vehicles when you're shopping for a new vehicle or a used one, if the safety factors are very important to you. Christa?
This first question is from Amber in Florida. My husband and I have decided to buy a new fun vehicle. We are building a Jeep with all the specs we want. We've worked through all the costs and have gotten to what we think is the best deal. I have two questions before we actually finalize the process. One, we can pay cash for the entire purchase, but would it be beneficial to use a credit card for the purchase to maximize our 2% cash back? We will pay the card off immediately, negating any credit card fees. And two, after you commit at the dealer, you end up in the office so they can sell you all the extra packages.
The F&I department.
Yes. Do you ever buy these extras, such as extra bumper-to-bumper, dent protection, extra powertrain, blah, blah, blah? I always feel like I'm being taken for a ride, but then wonder later if I should have purchased.
You are being taken for a ride, Amber. All the money in the dealership and the sale of a new vehicle or a used one is in the F&I department, finance and insurance department. The sale of the vehicle itself is, except during the shortages we've had recently where dealers have been selling at manufacturer suggested even above, the sale of the vehicles normally is not profitable. It's all the add-ons they sell you later. As I've explained before, do not tell a dealer you're going to pay cash as you're negotiating a deal, because they make money on the financing. They make money on all those add-ons. You don't want any of them. They are what are known as packs. Packs are things that a dealer sells at massive markups that have very little practical value to you at all. So you keep smiling and you say, no, thank you. No, thank you. No, thank you. No, thank you. And depending on the person sitting across the table from you, they may become hostile, they may become frustrated, or they may stay kind. It just depends on the personality of that individual who's working F&I at that dealership. As for using a credit card to buy that Jeep, most dealers will not permit you to do that. Even if you would pay the merchant fees, they may not permit you to do that. That will vary by dealership. And if you do have to pay their merchant fees, it will likely exceed the cash back reward that you would have on that card.
Okay, Kim in West Virginia says, I recently rented a car on Touro, and it was a good experience, but I had an issue with valet parking at my hotel that your listeners could learn from. By my estimates, my rental had a little less than a half a tank of gas when I dropped it with the valet. However, when I picked the car up, my gas light was on.
Ooh.
I am not the type of person who would drive with my gas light on, and I knew something was not right. My daughter and I were able to find gas within a few miles, but I was terrified of running out. When I turned the car in, the owner felt that there were more miles in the car than should have been for 1.5 tanks of gas. On the way home, I only used a little over a half a tank for the same trip. I called the hotel and was given an email for the manager to report my problem. After no responses, I contacted the corporate office. Still no response, but lesson learned. Always take a picture of your mileage and gas gauge when using a valet. I will report to the BBB next. Have you seen Ferris Bueller's Day Off?
I've seen little parts of it where they take a Ferrari or something, they're running it all around or something.
Ferris and Cameron, his best friend, take Cameron's dad's precious Porsche.
Oh, Porsche, okay.
And they valet park it, and then you see the valets just having a total joyride with it all over Chicago.
So, as you may be aware, I don't normally use valet, but not for the reason that may have happened in this case. It's because if a valet does wreck your car, just parking it, dents it, whatever, it is almost impossible to get the valet company, or in this case a hotel, to pay for that damage. And this has been an area of problem for as long as I can remember. I don't even know how many times we've had questions from people over the years who have valeted a car and it's been damaged and nobody wants to pay. So in this case, having somebody run up a fuel bill on you is the least bad scenario I think we've heard about a valet. And I am a self-parker, not because at a lot of hotels now, you don't get a cheaper price, self-parking versus valet. I still would self-park rather than valet.
I have to call you out on the fact that you're a self-parker, but what happened to your rental car one time when you self-parked it? Remember when the glass...
Okay. All right.
I'm just saying.
Okay. All right. I was on book tour. And we were doing media appearances in New York. I was doing the morning shows. And parking at the hotel was outrageous. So I talked to my nephew, who at that point lived on the Upper East Side of Manhattan, and he told me where I was allowed to park for free in Manhattan. And I parked east of 3rd Avenue, and I parked in the 80s. And then I took the subway in to my hotel from there and avoided all parking charges. Well, do the morning show appearances and all that. And the reason I had a rental car was I then had appearances in Connecticut, plus a lunch I was supposed to speak at for hundreds of people. And get off the subway, get to the car, and my car is heavily damaged and the vehicle behind me is destroyed because a window fell out of a condominium from 40 stories up, came all the way down the street, destroyed this lawyer's car that was parked behind me, bounced off of that, and then heavily damaged the rental car and may have been totaled. And that was just a freak occurrence, and not because I was trying to avoid cost. It just happened because I was trying to avoid cost.
You also had your car broken into when you've found free parking, but that's okay. But
I've only had my car broken into over my lifetime 6 times.
6? I've never had my car broken into.
6 times over the years.
Okay. Jason in Arizona says, I'm 49 and got a late start in saving for retirement. I started saving when I was 45. My work does a 3% match on the 401k, and they contribute $125 per month to my HSA. I max out my HSA and my Roth. Recently, I started maxing out my 401k. What percentage should I put into the 401k and the Roth 401k? Currently, I'm doing a 50-50 split between the two work options.
So you have not said your income level, and that's the key determinant. Here you are mid-career, coming close to age 50. Happy birthday to you, next birthday. So, Jason, unless you are an ultra-high income earner which don't know if you're single or married. Say if you're single, you're earning above $300,000 a year, married above $500,000 a year. You're better off doing the Roth version of your 401k instead of the traditional 401k. The reason is the company match they're doing is automatically going to be traditional, pre-tax. But the money you're contributing, being in after tax, with tax rates today being unusually low by historical standards, the lower your income, the more that tilts the answer to be, don't do this 50-50 split. Do very heavily or totally in Roth 401k, because you're eliminating the tax issues you would have much later in life in retirement. And I know there's always a lot of blowback from financial people when I say that, and accountants. I just feel that a bird in the hand is really valuable right now at today's abnormally, by historical standards, low federal tax rates. Coming up next, something that's abnormally high. A lot of times your receipt after you bought something, I got something I need you to be looking out for with an eagle eye. One of the fastest growing retailers in the United States is Dollar General. Dollar General opens stores in rural America and also urban and suburban America that are small format stores that sell a variety of items at prices similar to what you might find at a Walmart, but a much smaller selection and generally smaller size items than what you might buy at a Walmart. Well, according to an investigation by Barron's, Dollar General repeatedly charges people more at the register than the price that is on the shelf. And in the states of North Carolina, Louisiana, Mississippi, Arizona, and Ohio, the Dollar General people have been sued by their states for pricing errors. That's what they call them, is pricing errors, when the price is one thing on the shelf and then you're charged a higher price at the register. And the company is also under action in New Jersey and New York. In one audit of Dollar General, every single store audited, 100% of the stores were having significant pricing errors where the price on the shelf was lower than what people were being charged at the register. Obviously, there's a systemic problem at Dollar General with having the correct pricing on the shelf. Dollar General, as is always their way, in their response to lawsuits and to Barron's, is defiant. That's their culture. But the point is, there's definitely a pricing problem, but it's not just a Dollar General problem. This is an issue in retail right now. The shortages of labor, the turmoil in retail has led to pricing errors both ways. Now, my deal is I ring myself up. I always want to use self-checkout because then I can see as I scan an item, I'm looking at the price. Scan, look at the price. And I was recently this was just a few days ago, I was in a Walmart and an item came up at $6 cheaper, came up at $10 instead of $15.99. $10 flat instead of $15.99. So there's the person there who's checking to see if you're shoplifting or not at the self-checkout. And I go over to the individual and I said, I've got a pricing problem here. And I said, this shirt rang up as $10 and it's supposed to be $15.99. And as always happens when I point that out to someone in a store, they look at me like I got three heads. And the response I loved was, well, I guess it's your lucky day. But at least I had self-reported that something rang up too cheap in that case. But most of the time it's the other way. I'm saying, this on the shelf says blah, 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 and here it rang up for more, and they come over, they key in whatever, and I get that price. It's your money, it's my money. We're dealing with the cycle of inflation, especially on groceries. And if something doesn't ring up at that week's sale price or doesn't ring up at the price you saw on the shelf, that's your money that you worked hard for. And just be warned, the Dollar General problem is not exclusively a Dollar General problem. It may be more amplified at Dollar General than it is at other retailers. But it is a problem, and I remember numbers. So if I'm buying 20 items at a retail store, I remember what it said for the price of all 20 items.
That's my problem. I don't remember.
So the alternative is, what I love is retailers where I can scan items myself. And more retailers, if you're a regular shopper there, you can use that app to do a price check or to actually ring up your own sale. And then you're able, at the time you pull the item from the shelf, you're able to see what the actual price is, showing that they're going to charge you versus whatever was there on the shelf. And just know, this is a clear problem in retail, and you don't want to throw your own money away.
All right. This question's from Curtis in California. And also, by the way, there were a couple of questions about the same topic. Our umbrella insurance had an incredible leap from last year to this year. $325 to $569 for $2 million in coverage. I checked with our homeowners insurer, and it's even more, $593. What is going on?
So the auto and homeowners insurance markets are having what's known as an underwriting problem. That's a nice way of saying they've mispriced so much of the insurance they sell, and their losses are way exceeding what their guesstimates said they would be. A number of insurers are collecting premiums way below what their actual cost of doing business is. Now, I know of no reason why the umbrella insurance products would be running up in price other than the insurer that went from $325 to $569 has been reporting underwriting losses lately, and they've signaled to Wall Street that they're going to be pushing up rates. So I don't think there's a specific underwriting reason why an umbrella policy, which is an excess liability policy, would be going up. But overall, they've been collecting far too few dollars. You did the right thing by checking with both major insurers you do business with, and the prices are nearly identical for the umbrella policy. But just know the reason for the run-up is that a lot of insurers, their calculations were wrong. They haven't been charging enough, and that's why a lot of us are going to see sticker shock on premiums at renewal, especially for auto, not necessarily for things like umbrella policies.
Jeff in Georgia says, I have a tax bill that I can't fit on my current credit cards. I want to avoid the interest payments and penalties to the IRS, and I have great credit. So I began to wonder, can I get an introductory 0% credit card to pay my tax bill? Is there a better option?
So, okay, a couple of things, Jeff. You're not going to hurt your credit doing a payment plan with the IRS. The payment plan with the IRS is at a much lower effective interest rate than what you typically pay a credit card company. Those rates were exceedingly low for a long period of time. They're a little higher now. They reset regularly. You can find the current interest rate right now just by searching the IRS website. But the interest rate is lower than with a card. If you apply for a 0% intro card and you use that to pay your taxes, you'll have to pay a fee up front to the IRS for paying your tax bill with a credit card. And that fee usually will be more or less 3%. So you have that cost up front. You then have the 0% for the period of the intro as long as you could pay it off in that time period. But don't be afraid to do a payment plan with the IRS. The way it works is you file your tax return on time even if you don't have the money to pay your tax bill. You send them what you can afford to send them from $0 to whatever amount for the taxes you owe. You then propose a payment plan to the IRS, which it will take them a long, long time to respond to. It may take them as long as a year to say yes or no to the payment plan you propose. In the meantime, just pay them every month based on the payment plan that you propose to the IRS. You'll be paying the really pretty amazingly low interest rate, and you'll be fine doing it that way. The one thing not to do is use a credit card on which you're paying normal credit card interest rates, which, depending on whose calculations you believe, the average credit card now carries a rate of either 19% or 23%, depending on whose formula you trust.
Chris in Ohio says, Clark, just like you, I'm not a fan of Visa gift cards, but I was wondering something. What happens if you buy an item with a gift card and then later you return the item but have already disposed of that gift card? Does the store refund you in cash, or do they have the card to put the credit back onto?
So normally what will happen in that case, Chris, and it's not a universal thing, but most often a store will give you store credit. So you'll have their credit, not the Visa gift card credit, and that's what you'll have to do with the money is you'll have to use it within the walls of that retailer. Very rarely in a situation like that, the retailer might approve giving you cash as a refund, but most often it will be a store credit in a case like that. Just make sure you say, I don't have that gift card anymore. I can't have a refund back to that gift card. And then it'll be from that point their store process or the negotiation you do with them, whether you have a store credit or they in fact give you cash at that point.
Or they might credit another credit card that you do have.
I've never heard of anybody doing that.
I had that happen one time.
Did you really?
I did.
Okay, that's a first. I've never heard of anybody being able to do that. That's cool. Okay, because that's an unusual thing for a store to do. And I want to thank you so much for being with us today. I hope you've heard something today that's useful in your life. I want to tell you we have information for you every single day in our free newsletters. And if you go to clark.com/newsletters, you can see what we've got available to help you stretch every dollar.